Good morning, everyone. Good morning, ma'am. I hope everyone's ready for today's topic. I hope everyone will listen and understand further the session for today. Now, before anything else, have you heard about excise tax? I know some of you are familiar, perhaps some of you are not. Now, today we are going to discuss about excise tax. I am Charmeleon Eliseo, and I will be discussing this to you. Now, for today's agenda, we will understand the concept of excise tax, to define the nature of excise tax, and to explain the taxable transaction of excise tax. Now, what is really an excise tax? It is another type of indirect tax imposed on the producer but passed on to the consumer. It is imposed only on limited and specific goods, generally imposed on harmful or non-essential goods manufactured or produced in the Philippines for domestic sale, consumption, or any other disposition including imported goods, imposed under NIRC in addition to VAT or OP or value-added tax, and deductible for income tax purposes, meaning an excise tax is burden tax which is passed on to the consumer, which is the end user, and since unlike any other tax that is indirect, excise tax is indirect tax. Now, there are two classifications of excise tax. These are specific tax and ad valorem tax. So when we say specific tax, it is computed as number of units or other measurements times the specific tax rate, while ad valorem tax computed as number of units or other measurements times the selling price of any specific value per unit times the ad valorem tax, which is discussed further later. Now, have you seen these pictures before? Or have you familiar with these pictures? I know some of you are familiar because this is seen every day with when we are going outside or when we are buying on the store. So these are tobacco. Here, this is liquor. This is the petroleum products, and this is the automobile vehicle. So now, why I'm showing these pictures to you? Because these goods are subject to excise tax. So under section 141 to 143, which is the alcohol products, these are distilled spirit, wines, and fermented liquors that have you seen previous on the picture. So under section 144 to 146, these are tobacco products, specifically tobacco products, cigar and cigarettes, and expansion fee. Petroleum products, on the other hand, under section 148, mineral products under section 151, and lastly, the miscellaneous article, which are the automobiles, the non-essential goods, non-essential services, and the sweetened beverages, which is both under RA 10963 under train law. Now, I hope everything is clear on that. So these are additions under train law. So when we say non-essential services, this is the 5% tax on gross receipts, net of excise tax and VAT derived from performance of invasive cosmetic surgeries, mga body enhancement for aesthetic purposes. However, these two here are exempted from the excise tax. So these are procedures necessary to ameliorate a deformity arising from or directly related to congenital or development defect or abnormality. These are personal injury resulting from an accident or trauma or disfiguring disease, tumor, virus, or infection. While stated by the National Health Insurance, cases or treatments covered from them are also exempted from the excise tax. On the other hand, the sweetened beverages on 6% or 6 pesos liter using purely caloric sweetener, purely non-caloric sweetener, or mixtures of both. 12 pesos per liter, which is purely high fructose corn syrup or a combination with any caloric or non-caloric sweetener. Lastly, it is exempt, which is the purely coconut sugar or purely stable glycosides. Now, these are the products, or these are the excisable products that is not considered under this provision. Number 1 is all milk products, the 100% natural fruit juice, the 100% natural vegetable juices, meal replacement and medically indicated beverages. Lastly, the ground coffee, the instant soluble coffee, and prepackaged powdered coffee products. Now, I want you to take note that under excise tax, there are gross selling price of goods subject to ad valorem tax. Now, under letter A, the price excluding the VAT at which the goods are sold, take note, are sold at wholesale or through sales agents. Now, under ad valorem, if the manufacturer also sells the good or wholesaler in another establishment of which he is the owner, the wholesaler price in the latter establishment shall be the gross selling price. Lastly, if the price is less than the cost of manufacturing plus expenses, the gross selling price shall equal such cost plus expense plus a proportionate margin of profit, which is less than or equal to 10% of the goods of the cost of expenses. Now, these are the selling price, which is subject to ad valorem tax. Now, who are the persons subject to excise tax? So, under domestic products, these are the manufacturer or producer of domestic products that shall file the return and pay the excise tax before the removal of the domestic products from the place of production. So meaning, the domestic manufacturer shall file and return the pay before siya ma-place into another establishment or before the product or before the domestic products from the place of production. Second, the owner or person having possession of domestic product which were removed from place of production without payment of the excise tax. These are liable, no? So this is the person or having possession removed from place of production without the payment of the excise tax. Lastly, the first buyer, purchaser, or transferee for local sale or transfer in the case of indigenous petroleum, natural gas, or liquefied natural gas. So when we say, when the buyer or the purchaser purchase the indigenous petroleum, natural gas, or liquefied natural gas, she or he is subject to excise tax. On the other hand, the imported products, so the importer shall file the return and pay the tax before removal of imported good from the customs custody. Just like in domestic products, so before the removal of imported goods from the custom. So meaning, di ba, if a product imported ay nagasulod diri, so which is before man na siya ma-gather o before siya ma-distribute, first kailangan siya mo sa customs or customs custody. Now, the second is the person who is found in possession of articles which are exempt from excise tax, other those legally entitled to exemption. Now, take note of that persons under or subject to excise tax. Now, when to file the payment of excise tax? Now, payable upon the removal of the goods from the production. For imported goods naman, excise tax is payable before the release from the Bureau of Customs, just like I have said earlier. So when and where to file the payment of excise tax? Before the release from the custom. For metallic or mineral products locally produced is payable within 15 days after the end of the quarter when the product is removed. Now, this is the sample problem. So, a VAT-registered taxpayer imported machines to be used in the Philippines as follows. We have here the machine 1, 2, 3, which is with its purchase price and purpose. Machine 1 is equivalent to 100,000, machine 2, 200,000, and machine 3 is 300,000, which including her purposes. Machine 1 is for personal use, machine 2 is for business use, and machine 3 is for sale. So the importation were subject to 15% excise tax based on the purchase price. So these are the purchase price. Machine 3 was sold for 1 million net of VAT. Compute for VAT on importation and VAT payable on sale. This is the solution. So purchase price on 3 machines, which is the 100,000, 200,000, and 300,000, which is equivalent to 600,000. Add the excise tax of 600 times 610,000, which I mentioned earlier na 15% yung excise tax, times 50%, which is 300, the total tax base of 900, the tax rate of 12%. So VAT on importation is 180,000. Now, output tax on machine. Since mentioned earlier na machine 3 was sold for 100,000, which is the net of VAT. Here. Oh no. 1 million times 12% is equal to 120,000 less the input tax of VAT importation for the 2 machines, which is the 2 and 3. So 500,000 times 1.5 times 12%, which is the 900. Sorry. So the VAT payable is 30,000 rather. So the key point is here, excise tax is included in the tax base to compute for VAT on importation, which is earlier mentioned na in a sample problem is subject to 50% excise tax. And that's all for my discussion. I hope everyone understand for today's session, and thank you so much.